Good day everyone. Today, I will present my final project for our capital market course entitled An Analysis of 5 Selected Stocks. This study focuses on 5 major global companies from different industries, namely Amazon, Apple, Caterpillar, Chevron, and Johnson & Johnson. The purpose of this presentation is to analyze their company performance, financial strength, response during global crisis, and long-term investment potential. Through this analysis, I was able to understand how different companies survive economic challenges, maintain competitiveness, and continue growing despite changes in the global market. This presentation discusses 5 selected companies that represent different industries in the global economy. Amazon and Apple represent the technology sector, Caterpillar represents industrial and infrastructure development, Chevron represents the energy industry, and Johnson & Johnson represents the healthcare sector. These companies were selected because they are globally recognized, financially strong, and influential in their respective industries. Amazon is one of the world's largest e-commerce and technology companies. It started as an online bookstore, but eventually expanded into cloud computing, artificial intelligence, streaming services, and logistics. One of the Amazon's biggest strength is Amazon Web Services or AWS, which became a major source of profit and long-term growth for the company. During the 2008 financial crisis, Amazon remained resilient because consumers shifted toward online shopping as a cheaper and more convenient alternative to physical stores. During the COVID-19 pandemic, Amazon experienced even stronger growth because people relied heavily on online shopping and digital services while staying at home. Amazon also continues to invest in artificial intelligence, automation, and cloud computing infrastructure. These innovations help strengthen its position as a leader in technology and e-commerce. I chose Amazon because it demonstrates strong long-term growth, innovation, and adaptability, making it one of the most attractive companies for long-term investment. Apple is one of the most influential technology companies in the world. It is widely known for products such as iPhone, MacBook, iPad, Apple Watch, and digital services like Apple Music and iCloud. Apple's biggest advantage is its ecosystem strategy, where all its devices and services are highly connected, creating strong customer loyalty and a seamless user experience. Even during the 2008 financial crisis, Apple maintained strong performance because demand for products like the iPhone continued to grow. During the COVID-19 pandemic, Apple benefited from increased demand for laptops, tablets, and smartphones due to remote work and online learning. The company also expanded its services segment, which became an important source of recurring revenue. Apple continuously invests in innovation, artificial intelligence, and advanced chip development such as Apple Silicon. These innovations strengthen its competitiveness and long-term growth potential. I chose Apple because it is financially strong, highly innovative, and globally respected for its brand and customer loyalty. Caterpillar is a global leader in heavy machinery, construction equipment, and mining solutions. Its products are widely used in construction, transportation, infrastructure, and mining industries around the world. Because of its connection to infrastructure and industrial activity, Caterpillar's performance is highly influenced by economic conditions and global construction demand. During the 2008 financial crisis, Caterpillar experienced declining sales because many infrastructure and mining projects were delayed or canceled. However, the company remains stable through cost control, operational efficiency, and strong dealer support. During the COVID-19 pandemic, Caterpillar also faced challenges due to supply chain disruptions and reduced construction activities, but the company eventually recovered as infrastructure spending increased again. Caterpillar continues to focus on automation, digital monitoring system, and fuel-efficient machinery. I chose Caterpillar because it shows how industrial companies recover after economic downturns and maintain long-term growth through innovation and global demand for infrastructure. Chevron Corporation is one of the world's largest energy companies operating in oil, natural gas, refining, and energy distribution. The company plays an important role in meeting global energy demand, making it a major part of the global economy. Chevron is also investing in renewable energy and lower carbon technologies to support long-term sustainability. During the 2008 financial crisis, Chevron was heavily affected because oil prices and global energy demand declined sharply. Despite this, the company remained financially stable through cost management and operational efficiency. During the COVID-19 pandemic, global lockdowns caused another decline in energy demand, but Chevron maintained stability by reducing operating costs and continuing essential operations. Chevron's long-term strategy includes renewable fuels, hydrogen, carbon capture technologies, and digital transformation. And I chose Chevron because it demonstrates resilience in a highly volatile industry while maintaining strong cash flow, global operations, and long-term growth opportunities. Johnson & Johnson is one of the largest and most stable healthcare companies in the world. It operates in pharmaceuticals, medical devices, and healthcare products. The company is known for trusted brands such as Band-Aid, Tylenol, Johnson's, and many advanced medical treatments and technologies. Unlike companies in more cyclical industries, Johnson & Johnson remained stable during the 2008 financial crisis because healthcare products and medicines are considered essential needs. During the COVID-19 pandemic, the company played a major role in healthcare response, vaccine development, and medical supply production. Johnson & Johnson's diversified business structure helps reduce risk and maintain consistent profitability. The company also continues investing in biotechnology, medical innovation, and research and development. I chose Johnson & Johnson because it represents stability, resilience, and long-term reliability, making it a strong defensive investment during uncertain economic conditions. As a potential investor, I would continue investing using a diversified strategy to balance growth and stability. My proposed allocation includes 25% for Amazon, 25% for Apple, 20% for Chevron, 15% for Caterpillar, and 15% for Johnson & Johnson. Amazon and Apple receive the largest allocation because of their strong growth potential, technological leadership, and innovation. Chevron provides stable cash flow and dividend opportunities through energy sector. Caterpillar adds exposure to infrastructure and industrial growth, while Johnson & Johnson provides defensive stability through healthcare demand. This diversified strategy helps reduce overall investment risk while still allowing opportunities for long-term growth. By investing across multiple industries Investors can benefit from different market conditions and reduce dependence on a single sector. This analysis shows that Amazon, Apple, and Johnson & Johnson are among the strongest long-term investment options because they combine growth, innovation, and stability. Amazon demonstrates strong growth through e-commerce, cloud computing, and artificial intelligence. Apple continues to lead through innovation, brand loyalty, and ecosystem integration. Johnson & Johnson provides stability and resilience because healthcare demand remains strong even during economic downturns. Meanwhile, Caterpillar and Chevron also contribute important value through industrial development and energy supply. Together, these companies create a diversified portfolio that balances growth, opportunities, and financial stability. This project helped me better understand stock analysis, diversification, crisis resilience, and investment decision making. It also showed the importance of choosing companies with strong fundamentals, innovation, and long-term growth potential in achieving sustainable financial success.